Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, welcome to The Week That Was, the weekly podcast that sums up market movements and events from the past week and its implication on asset markets. Hi, I am Vinay Joseph, the host for this week's podcast. Indian markets recorded its best week in over 2 months as investor sentiment was boosted by cuts in the GST rates, which is likely to boost consumption as we enter the festive season. The benchmark Nifty 50 index rose by 1.3% for the past week, outperforming global markets. The broader markets outperformed with the mid-cap and small-cap indices up 2.4% and 2.5% respectively. Sectorally, most of the sectors ended in the green, with auto and metal sectors surging by over 5% each. On the other hand, IT and telecom were the only sectors to end in the red. Moving to fixed income market, the benchmark 10-year government bond yield fell by over 10 bips for the week, as the fiscal strain expected from these GST tax cut was much lower than what markets were expecting. On the dollar, the rupee started the week on a low point, hitting new all-time highs against the USD, Euro and JPY. But it did recover some of the losses by the end of the week amid a rally in risk assets, falling domestic bond yields and expectations of US Fed rate cut later this month on the back of very weak payroll data from US. Now, the key event for the week was the GST Council decision to revamp GST rates, effective from 22nd September this year. Now, the Council announced a new two-slab structure of 5% and 18%, with select luxury and sin goods taxed at 40%. The rationalization of GST rates were on several consumption items, including food products, electronics, autos, insurance, and also intermediate goods like cement and tractors, to name a few. Further, the elimination of compensation cess for most goods was also announced. Overall, the tax cut is very well timed, just ahead of the festival season, and is likely to support growth given the tariff headwinds. Over the medium term, the GST cuts could not only increase GDP, but more importantly lower structurally India's inflation, which could support lower interest rates in this decade. This is a significant positive for Indian equities and risk assets. That's all for this week. Thank you for listening to our podcast, and if you find it useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.